Hey everyone, I just wanted to take a few moments here and talk a little bit about what we're doing here in the new year in terms of private capital capacity to lend. You know, in starting the new year, we actually became a private label lender, and we're doing hard money, private money loans, specifically in the residential space. And want to talk a little bit, about how some of that works in terms of, our private money versus hard money. Today's market is just a little bit different in terms of rate. When we get into some of our more conventional stuff, we're looking at prime plus on some of the stuff, and I've never seen, rates at prime plus still coming out, at 8 and 9%. And 10%. It's just crazy. But, that's an entirely different conversation. We're going to keep this more to the private capital side. We are currently funding single family, anywhere between 1 and 4 units on fix and flips, rentals, cash outs, refinances, new construction, up to the 4 units. And we're still doing, the multifamily bridge loans as well, 5 units to 20 units. We're doing value add type of funding in those type of transactions for multifamily apartment buildings, and also acquisitions, purchase, cash out, refis. We look at what we're doing right now, just on the residential side, it's all non-owner occupied, but we do a very unique thing. The way that our private label fund works, we're able to close loans right now, still in today's market, within 4 to 10 days. And there's a lot of value behind that, because we know that our real estate investors need to move quickly. Having that partner that has the sense of urgency and the need for speed, so to speak, is super critical in today's market, primarily because we see a lot of contracts come across our desk. And those contracts typically say, all cash buy. Some of them have the finance contingencies, but it doesn't matter for us. Whichever you've got that contract under, when you know that you have a partner that can move fast and close your deal within the 4 to 10 day space, it is just unparalleled. And the reason we're able to do that is because any investor with a 660 score that comes into our system, whether they're doing some type of bridge loan, fix and flip, or just a bridge with no rehab, or a stabilized asset type thing, we have the ability to move very quickly on that for a number of reasons. We like our borrowers with the 660 scores and higher, a little experience. We will take first time buyers as well, but we only do a soft credit pull. So there's no need to stop with the hard inquiries that ding your score. We can do a soft credit pull to get things started. The appraisal, we actually cover on the front end of it. So when a deal comes into the system, I'm thinking of one, for example, that came in over the holidays. I think it came in the 21st. Our resources were able to have a BPO done on the 20. I think we did it on the 23rd, I want to say, very quickly, just to move things along. So we absorb that cost on the front end. And we have it within our processing fee. It's a small fee that's actually paid at closing, but nothing to cover up on the front side, and it just comes out of the processing fee to be upfront with you and transparent. So when any investor comes into our system, as they're thinking about, like, how can I get a deal done quick? We have the soft credit pull to get started. We cover the appraisal on the front end. We move immediately on that, right? And our technology is essentially bar none through the private label. When an investor comes into our system and creates an account, they're able to just, boom, upload all of their docs right into the system. They're able to get the actual offer for financing right in an email, right back out to them. They click accept, it goes into processing, underwriting, and we are just off to the races. So we have an entirely streamlined system that is super powerful right now in order to help real estate investors keep things moving along. Now, when it comes to the score range, as I mentioned, 660 and up gets is what we like for the high speed fix and flips. But we also understand that we have a lot of investors that come to the system that perhaps are not maybe they're using their credit a lot, the utilization is up, and their score is not in that 660 range. So we can still do deals through our correspondent and private family offices, even down into the 600, 620 range. We have investors that come to us with 630 scores, and we're still able to get them fix and flips. If they have experience, we can still get them 85 to 90%, on the LTC on their purchase, 100% on their rehab, and we move on that scale of 70 to 75% of the ARV still in today's market, and we can go anywhere between sometimes on first time investors they can be around 80%. You got to get through that first deal, and then we can get you more leverage so that you're out of pocket and your loan to cost comes down. And we still move on that scale on the ARVs as high as 75% still in today's world. So, we have the ability to move quick. help on the leverage side of things too. We're looking at doing the 85 or even 90%. We have programs that will do that. So you come out of pocket only 10, 15% in the deal, but still be able to close within record timing. And I think, that just speaks a lot for, what our value is for our real estate investors. We think about them quite a bit when we create all of the structures for our programs and when we onboard new programs to help in today's market. The bridge loans and fix and flips moves quickly. We also have a new program, which is a bank statement program that we can underwrite. We have folks that have great credit, high income, or a lot of cash moving through the accounts. And we can use the cash moving through the accounts to underwrite to a 50% DTI. This one's a little different because it's bank statement, and we can qualify you once on that DTI and close as many deals as you can bring in the door, essentially. And this is more so on long-term money as well. Just send over this scenario. You can go right to our website at apply.rfsfunding.com to get things started. And what happens is you just create an account, put in the details of the deal. We get it through the portal on the back end, and we begin working out the pricing and so forth for you very quickly. Now, we also are looking at, we do a lot of conventional stuff too, a lot of conventional real estate deals. We have certain systems, we're part of platforms that allow us to bring those commercial conventional deals into those systems where we actually have, banks and credit unions and CMBS pools all compete for that business. And we're just seeing some amazing things right now. Sports, we have borrowers buying sports facilities, medical buildings. Let me think, just unit, I think a 6-unit retail commercial space, things of that nature. We're able to also help those funds when we get more over into the conventional side, and we use our relationships to help get the commercial stuff done. But we're still seeing amazing rates on stuff in today's world, highly competitive and still able to close quickly. So when we move into conventional, it's more so like full doc type of processing. But when we think about just the private capital side for our real estate investors, we are low doc, light doc. We're just looking for the LLC docs, some basic bank statements show you've got your money to close, you've got your down payment, some cash to kickstart your renovations. And again, we keep things moving. And those in our private money side, we don't look for tax returns. We don't look to verify employment. We don't look to verify income. Those are things we're not going to do a verification of mortgage. Those are the things that we're really not interested in. It's all about the asset that we're looking to finance, get the deal done based on, wherever the credit score is, make sure like I said, you got a little liquidity to handle your down payments, kickstart your renovation. And then we just look at a little bit of experience. Is it the first deal, second, third, or is it the 10th? And from there we can get, very aggressive on pricing, et cetera, for you. So I just wanted to share a little bit of information today, on how we're handling the private money in today's world. The markets are always changing, but we are always looking to just stay aggressive in the markets and keep things moving as fast as possible for our real estate investors. Thank you.